Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is the business of real estate investing. Hey, I always just like to touch base with you guys and make sure everything's going good, that you are moving forward with your real estate investing dreams here. And I'm just trying to do my best to give you plenty of fodder here that can help you to be effective real estate investors. So let's jump into our topic here, and I'm hoping this is we've been doing this 10 series thing. Well, it's the only time we've ever done this, a whole series like this, and it's 10 steps to real estate investing success, trying to highlight the key things you need to do to be an effective real estate investor. So today is the 5th installment of our 10 Steps to Real Estate Investing Success series, and it is entitled The Business of Real Estate Investing. Now, real estate, as you hopefully know, is a business, okay? It's a lot of people don't necessarily relate it to that. And I'm talking about specifically real estate investing, of course, but real estate investing is basically, okay, if you are generating an income and or profit through your real estate activities, you got to think this is a business. Now, that income, of course, it will be something that you're going to hopefully benefit from, but it's also something that the IRS and tax entities out there are going to want to tap into too, because that is considered part of your income. So if you don't treat your real estate business, okay, as a business, you probably will not only miss out on some great opportunities, but you may face legal issues down the road too, if you're getting this income in and you haven't really treated it as a business as such. In today's podcast, I will discuss what basic foundations you need to implement to not only protect yourself and your assets, but to build up a strong, solid real estate business foundation designed for success. Now, of course, that's what the series is about here. It's about 10 steps to real estate investing success. So that makes sense. So let's kind of look at the various components here. Now, you are, in fact, an investor. Okay, you're in real estate, but you're not necessarily an agent. Some of you may be agents or brokers out there, but you're in it for investing. And if you are an investor, let's take a look at that. The definition of an investor is an individual who commits money to investment purposes, okay, or products, which may include real estate with the expectation of financial gain. Notice by this definition, an investor only commits money. Ask yourself, are you really just a real estate investor? Are you only investing your money in real estate, or are you planning on investing much more than money, such as your time, energy, efforts, and relationship resources? If you just want to invest money only, well, that's cool and understandable. You will do well, right? With yields ranging from 6% to probably upwards of 150%, real estate is a great, totally passive investment as well. However, if you are planning on buying a few rental properties, maybe wholesaling, flipping, you're getting more involved than just investing in a real estate entity, then you should really treat it as a business. If you're looking at a let's say, building a significant income, building a portfolio, and creating a legacy to eventually hand down to your family, then you definitely need to build the right business foundation. Now, since it is a business, you need to look at it differently. That's why I'm going to talk about setting up a real estate investing business entity for maximum benefit and safety and leverage as well for the long term. So let's kind of just get perspective here. Take a moment to look deeper into what's behind the curtain, as they would say in the land of Oz, right? Even with a single buy and hold investment property, you can clearly see it is a small business. Okay, consider the facts. Okay, you have purchased a property, which is your asset, right? So you own it, it's your asset. However, a lender holds a mortgage on the property, which you have an obligation to pay. You are selling the use of the property space for a fee called rental income or revenue. You have a client or clients who are called tenants, okay? You have necessary expenses for the property, including such things as maintenance, advertising, renovations, appliance repairs, property management, etc. You have very real and necessary business operating expenses, such as your phone, vehicle, office supplies, a bookkeeper, accountant, attorney, etc. The IRS wants to know the details, as they always do, of this asset or business. You're required to submit annual year-end information for tax purposes. Your intention of investing in the property is to create financial gain through positive cash flow and equity appreciation. This is called a profit. Okay, so everything you hear about this, and again, I'm using sort of a rental property as an example. There are a lot of different types of real estate investing, as we talked about in earlier episodes of this series. When you expand on this idea by adding more revenue properties or even other real estate investment strategies, it quickly becomes apparent that this is definitely a business. So let's take a look at the basics. Okay, if this is a business, what do you have to do to establish it as such, right? So the first thing you would need to do is to set up a business entity. While it may be tempting to just give it a whirl as a sole proprietor, you can file your taxes jointly or individually or however you file your taxes, and you can list it as an income source. But you may be, taking unnecessary risk. If your business gets into any kind of legal hot water, your personal asset could be at risk. In addition, the right entity, whether it be an LLC or a S or a C corporation, for example, there are certain tax advantages and asset protection advantages as well. It's also much easier to get things like business credit if you are a separate entity. And, if you're going to look at financing or getting maybe significant funding for your entities, for your properties and so forth. Now, you'll want to set up an entity that has a separate tax ID aside from your personal Social Security. That's another reason why it's better to set up an entity as opposed to just filing with your personal income tax. This will ultimately benefit you in a number of ways, but one key advantage is in helping you by protecting your personal credit score or rating and helping you establish business credit for major property acquisitions. There are also tax benefits that come in the form of, for example, all of your business expenses that can be deducted, that can be applied against your business tax ID. As far as what type of entity to establish for your business, I personally recommend setting up an LLC, because I think it's relatively easy. It also does provide you asset protection. You can even set it up through, for example, LegalZoom.com for as little as, it used to be like $149. So it's relatively, like I said, easy to set up, and it will give you that separate entity status. Or you can go all out for a C or an S Corp, which is a little bit more involved, a little more expensive, but there are added benefits there that you don't get with a regular LLC. So either way, I'd suggest you discuss this with your accountant before deciding. Also, I'd recommend establishing a business entity that does not have your name in it. Now, the idea is that separate entity for asset protection purposes is that it's kind of slows down the process. If somebody is on your property, for example, and let's say you only have just a single family home, but somebody slips on the sidewalk, or there's a crack in the sidewalk leading up to the house, and they are hurt. Well, they could, really go after you if they want to file a lawsuit. If the property is under the name of an entity, it just kind of slows that process down, and they may just decide to go with your insurance and then do a settlement with the insurance and take care of their medical bills or what have you. But when you have asset protection, you can protect not only your personal assets from being attacked. Now, you may somebody could go after you and your car and your house and everything else that is in your name if you don't have that kind of protection. So you just want to take a look at that and make sure you kind of understand that aspect of it. So you'd want to put it under the name of something like C4 Properties, or whatever you could, if it's in California Properties.com, or whatever you might want to call the business. But it does help, again, if you don't put your name on there, and you try to, again, slow down that process where lawsuits flourish, especially in the state of California where I am. Okay, anyway, so the first thing is get that entity in place. Next, establish a location. Now, you can work out of your home. Of course, you could do that. But if you're looking at it for a long-term type of entity where you're going to grow, and maybe grow it into a big company that will have large properties and apartment complexes and things like this, you might want to establish a separate, maybe like a virtual address. And I'm not talking about it like a UPS store or a mailbox center, that kind of thing. The reason for this is that banks or other credit granting organizations oftentimes will do a Google search. They'll go to Google Maps and look at the map view. If they see there that it's mailboxes are us, and they'll realize that it's not necessarily a legitimate address. Now, virtual addresses, they give you a little bit more than that. Yeah, they do the same function as a mailbox center, but they also can have other benefits, such as if you want to have meetings there, you can rent meeting space, and it's a little bit more legit. So, and you can find virtual offices, through just doing a search online, and that'll help you to establish it. And they'll collect your business mail and that kind of thing. And you can go, they can either mail it to you or you can pick it up, however you want to do that. It can be a real advantage. Another thing is to get a separate business phone number. Now, people do this in a number of different ways. You don't want to have to do like an expensive business landline or something of that nature. You can often do that through a service like Google Voice, or get a virtual business telephone service like companies like GoToPhone.com and 800.com. Are entities that'll give you that separate phone number. It'll also have it'll take messages for you, or it could forward it straight through to you, and on your personal cell phone. So there's some advantages there. Also, if you can get yourself listed in the online yellow pages, that also is another benefit. Again, business creditors, people that are looking to give you maybe a line of business, that really helps if you're in real estate. Maybe you need to buy something that isn't a property, but you need to buy something for your property. Having a line of credit can help you. And so, they'll look and they'll check you out. And if they see that you're listed in the yellow pages, and you're not in a mailboxes are us, living in that little box there, then they'll be more likely to set up that line of credit. Other things that are helpful too, stationery and business cards. I know it sounds kind of hokey, but it actually does help, especially if you're dealing with banks, and that you go in there and you hand them a business card. If you show them your business plan, which in the beginning you might have to get funded to do a project. Maybe it's a major rehab or something that kind of goes beyond the nature of just getting a mortgage, you can do this on your letterhead. It looks a little more impressive. Okay. And then record keeping is real key for a business entity. And one of the greatest benefits of having a real estate investing business are the amazing tax benefits. But to realize those benefits, you need to keep excellent records, and that's keep track of everything. And one of the best ways to do that is to set up a business from day one with a Quicken or QuickBooks accounting system. I think QuickBooks gives you more flexibility as the business grows. Quicken can do the same basic stuff, but I think QuickBooks is pretty reasonable, and it doesn't cost that much. You can even go online if you're going to share it with your accountant or other people. So there's some real neat advantages to QuickBooks. If you're not real business or tax savvy, again, I would talk to your real estate CPA or bookkeeper to help you set it up initially. So you'd have to create classes and different things for different entities and within your business. And so, that's just a good way to do it. But some of the things that you need to track, and this is not an inclusive list by any means, but it gives you an idea of, the things that are there. So you're looking at income and expenses, so your key things, right? Your P&L, your profit and loss. And it's not just rents on the income side of things. There are things like late fees or return check fees or pet fees, key fees. I mean, there's all kinds of different fees. And then you might have coin-operated washer and dryer there. You might have extra storage space that you want to rent out, and they're going to pay separately for that, or extra parking space fees, just to name a few. So the income side, there's quite a few areas you could address there, and you want to separate those different types of income too on your, as you present it to your accountant for your taxes each year. But then things like mortgage interest, depreciation, accelerated depreciation, property taxes, both county and city. Then you've got your detailed expenses and for a property, for example, again, we're talking, more or less on the rental side of things today, but, the anything you spend on your property. Now, there are things you spend on the business side of things, and then there are things you spend on the property. Now, the business expenses can include everything from bookkeeping, banking fees, CPA, attorney fees, advertising expense to get the word out that you have a vacancy, for example, a virtual office expenses we talked about, phone, stationery, things like that. Travel, if you have an out-of-state entity and you have to travel, your airfare, your rental car, your meals, all those things are deductible in this context if you're going there to work with your business, which is your rental property. And then, of course, there are the property expenses itself, and those things you may be more familiar with: repairs, maintenance, lawn care, landscaping, utilities, property management. There's a lot of things that are related to actually operating that property. I would recommend too, I think this would be really helpful for you as you're putting this all together, is to check out a couple of books by Michael Michalowicz. Now, he's been a guest on our show. Really is he's just a real smart guy, a businessman, great history, starting multiple businesses, but a great book, Profits First, by Michael Michalowicz, and there'll be a link to it in the show notes. But he started a revolution in business by setting up businesses that take their profits first and then pay expenses. Now, I don't know if you've ever been a small business person. I have, and it's usually where you have your business and you pay all your expenses first, and then whatever is left over goes to the business owner. And sometimes that can be really, bleak, and you're going, oh my gosh, how am I going to live on this? And he just flips it over, and he does it in a way that really makes sense and still helps you to meet your expenses, but at the same time, you're not always getting the short end of the stick, so to speak. You as the business owner should get the benefit of getting your amount that you need each month, and then go into the expense side of it. So it's a really good book, and it'd be a good one worth reviewing. He also has another really good book called Clockwork that talks to you about managing your time as a sole owner for a business. And so two good books. And you can also look up, he was... like I said, just look up his name, Michael Michalowicz. It's like Michael O-W-I-C-Z. And you could listen to the show that he was on. Another area, too, that you have to look at, and as far as, again, taking your business seriously, is to set up a team. And now I know you're probably thinking, oh my gosh, wait a minute, I just got one little rental property. I can barely afford to pay myself anything each month, let alone hire employees. And I'm not talking about employees, at least not yet, not until you at least reach your 7-figure income. But, we're talking about those people that are going to help. They're your partners and they're your team, but they're outside people that you regulate how you pay them. But I'm talking about attorneys, accountants, people on the out. Maybe it's a business consultant. You may hire virtual assistants here and there, but these are not people that you're committed to payroll. These are people that are just part of your team that have the same goals as you do to grow this business and make it successful. In fact, next week we're going to talk more about the team aspect. I want to spend enough time on that so you understand, who would be a part of that team. But we'll do that next week. Anyway, this is basically giving you an overview of the things that you should consider if you're really going to go into business as a real estate investor. The sooner you start treating everything you do as a business, the sooner you will be successful. There is a fine line that separates successful businesses from those who languish in mediocrity. I mean, if you look at the statistics, okay, for businesses that start out and how long they actually last, you'll see a very small percentage actually continue year after year after year. Many small businesses don't survive the first year or two. And, real estate is a little bit different. If you buy a rental property, it's going to go on for a while, and the income's going to continue to be generated if you're doing it right. Okay, so but real estate investing business is no different than others. You don't want to treat it like anything other than a business. You will not be maximizing your profits and can quickly run into trouble. Being an investor means more than finding good properties and doing good work. If you treat your real estate business like the business it deserves to be, you will gain access to more opportunities than you could ever imagine. So keep that in mind. It's a serious thing. You want to do it right? You're putting a lot of money into this, especially if you're buying properties here. You're going to be putting up some significant cash. You want to do it right, and you want to do it for maximum return. Well, that's it for now. Please note, Old Dog listeners, everything presented here today, including some links, and I'll have significant links in here too, as well as we've had during the whole series here. There's a lot of links that will be helpful for you. They can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode entitled The Business of Real Estate Investing. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.